Most small business owners think their CPA is going to be the one who helps them grow, make smarter decisions, and guides their strategy. But here's the truth. Your CPA is only one part of the puzzle and likely not the puzzle piece that you need for your business and where you are today. I've talked to many business owners who end up frustrated because they expect the wrong things from the wrong people. So, in this video, I'm going to give you a big picture map of the 5 main roles within an accounting and finance department in small businesses, and we're going to break down each one at a high level. Let's jump right in. From the outside, accounting looks simple. Enter transactions, run reports, be done with everything. But it's kind of like golf. I grew up playing golf, and if you're not a golfer, I've heard people say it can't be that hard of a sport. You hit a little white ball into a hole. But once you're in and once you're playing, you realize there are dozens of clubs, course conditions, even how the ball spins and moves depending on the way you swing the club. Tiny details can completely change the outcome. Accounting is just the same way. On the surface, it's just numbers. It seems simple. But underneath, there's a whole system of different players, and each one matters and has their own role. So today, we're going to look at these 5 roles and talk about the position they play within the accounting system. First, we have the leadership role. This has both a CFO and controller. Depending on the size of your business, you may need 1, 2, or none of these. The CFO is your financial storyteller. They focus on strategy, direction, capital decisions, and communicating the company's financial story, not only with inside the company, but outside the company as well, to outside owners, banks, investors, your tax CPA, everyone else outside the business. Your controller, on the other hand, makes sure that the numbers internally are accurate. They're over your accounting function. They set policies and procedures. They oversee the financial reporting. When you get a set of financials, it's generally the controller's job to make sure that those financials are good and accurate. We want to think about it this way. The CFO drives the car. The controller makes sure the engine is running smoothly. The CFO is setting the direction and making sure everyone is on the right course, and the controller is making sure the I's are dotted or the T's are crossed. Next, we have the management layer. Sometimes the controller will be in that management layer as well, but when you kind of build out these departments, that management layer is going to look like accounting managers or senior accountants. Accounting managers and senior accountants, they're maybe doing some of the work, but they're likely out of most of the day-to-day work, or for in those senior accountant roles, maybe they're still doing day-to-day work, but they're doing the more complex things, but they're guiding the employees, checking work, enforcing controls, and making sure that the system is working well. They're like the middle managers of the other company. They're sure doing some work, but they're mostly supervising and reviewing. Next, we have the operational staff. They're made up of bookkeepers, clerks, and staff accountants. These are kind of 3 different layers of people that have different years of experience or different educational requirements. Oftentimes, your bookkeepers and clerks can come from even outside of accounting. They're doing a lot of transactional work. Bookkeepers are typically in smaller businesses, and then when you get to bigger businesses, you have clerks that take on different parts of the role. So accounts payable, accounts receivable, payroll, and they're handling those day-to-day transactions and what that looks like for the business. The staff accountants are typically handling reconciliations, journal entries, a little bit more advanced work. Depending on the level of business and the size that you're at, oftentimes you'll have the bookkeepers and clerks handling that stuff, and then maybe an accounting manager or controller handling those reconciliations. But as you insert those layers, those staff accountants can be handling those things as well. When these entry level roles are weak, leadership ends up doing the grunt work. That's when you're paying the CFO a salary to do the bookkeeping. This is the situation you don't want at a business. And I often see this as people hire that higher level person first, and then they get a fraction of that person's brain going towards the big stuff that they paid them for, and they get a lot of their work going to the base level work. We want to be careful that we don't do that in a way that you're hiring and paying a big salary and then having 50% plus of that work being done at the bookkeeper or clerk level. When these businesses run well, that leadership is able to stay at that high level and allow those clerks to complete it. And that way you're getting the most out of that employee. We're not going to go into this today, but this is why people hire fractional CFOs or fractional controllers, is they maybe have that internal staff doing the low level work, and then they're able to hire that fractional person for just the amount of time that they need them, and keeping them doing the high level tasks. This is a way to save some money and a way to make sure that you're getting the highest level of expertise and not settling for worse talent at that high level because you're trying to cover all of the levels of the work. Next, at that same operational level, you'll have, as you get bigger, specialized staff. And this is tax accountants, cost accountants, financial analysts, internal auditors. You have roles that will do one very specific thing. So maybe they're doing sales tax, and you have all the different states and they're handling sales tax for every state. Maybe you have specific cost things that you're needing because you have a lot of inventory, you have a lot of products. That's where the cost accountants will come in, because they're going to help and be the experts in that area. Again, this is not your first step. This is a step that you take as you grow the business. So we've built out this whole pyramid, but you must be thinking, you said 5 levels. Where's the 5th? Well, that 5th is that CPA. And this is where the language gets confused a lot. And that CPA, you often have people looking for CPAs in those leadership or management positions. And you're not necessarily in a bad position if you hire those people in those positions, especially in that management layer, because that controller or accounting manager role is often very good for a CPA. It can be good for a CFO, but they need the right chops to fit into that CFO mold. So where we talk about the CPA, and where the CPA, the only place that the CPA is really required is in that external role, that external expert that is doing your taxes, handling audits, and potentially compliance and other filings where you need that external CPA signature. We're talking about private companies here, and private companies most often don't need those GAAP compliant financials. In the CPA, and what the CPA exam handles is stuff that often doesn't directly apply to the small business. So we want a CPA or even an EA to do our taxes. If we get to the point where we have audits or we need compliance from banking, we may need to have a good CPA to fill that role. It's critical as you grow to have a strong CPA and strong legal team, because they're going to help you see around corners that your internal staff may not be as keyed into. So we want really good internal staff that are strong at their particular disciplines. And then we want the CPA and the legal team to cover those things and fill in those gaps. Me as a CFO, I always said, I don't want to be the CPA for this business because I'm not in the tax stuff. I'm not in the audits. day in and day out. I want someone doing those tax, audit, and compliance things that is doing them every day, because they're going to be way better at that than I ever could have been if I'd been trying to act as the CPA for that company and the CFO for that company. When you know the difference between these roles, you stop expecting the wrong thing from the wrong person. Too often, I see businesses hire the CPA to be their bookkeeper, to be their management layer, to be their leadership layer. And in most cases, the CPA is not well equipped to do all of those jobs. In the same way, you also don't want to hire a CFO to do the bookkeeping work. So we have to make sure that the roles and people align at the level you need, because that compensation is going to be important to make sure that you're not overpaying for things that you don't need. You need to start today building the right financial team to support your business. And the right people in the right seats at the right pay is the best way to do that. In the next video, we're going to break down the role of the CPA. If they're not on your staff, what are they actually doing? What is their responsibility? We're going to break down what they do, what they don't do, and what their role is in your business. So I'd encourage you, subscribe, like this video, so that way it will get fed up to you when that releases next week. Thank you again for watching, and I'll see you next week.